Hi, everybody. Welcome to Empower 2024, our annual conference. I am thrilled, excited to be here with all of you as we kick off today's day, with this insightful panel, Unlocking Audience Insight, the key to go-to-market success. And I am excited to have two amazing speakers, panelists, experts with me, Janice Gordon and Sangram Vajre. Welcome to this panel.
Well, excited for this.
Yes,
Awesome.
let's go for it.
Let's get things kicked off. Let's get things kicked off with the introductions about you, about your business, and in general, what are you seeing out there in this new world?
Well, shall I start? Hello to everyone. My name's Janice B. Gordon, the Customer Growth Expert. I am founder of Scale Your Sales, which is a framework, but also a popular podcast as well. So what we do is we empower revenue leaders to create productive sales operations. And we'll talk a bit more in the panel about how that happens. And this really elevates customer centricity. Customers have got to be at the core of every decision you make. And it also accelerates revenue growth. Your customers are happy, you're happy. This is what we're all about. Now, through this proven framework, we have an actionable process and that will help to transform your teams, your operations for that higher revenue generating engine that's really efficient. So yeah, really happy to be part of this panel and get into this conversation with my mate there, Sanjay.
Yeah. Awesome. Thanks, Janice. Sangram.
Yeah. So, well, Janice, after that energy, I have to map up. So I'm standing up so that I can actually match the energy level with you across the pond over here. I think for some of you might know, I ran marketing at Pardot, where I learned a lot about marketing. So we went from $10 million company and then got acquired by Salesforce. So from that, I went to a $10 billion company. So talk about scale and all of those things. So Janice, you and I can have a lot of conversations around that because that was my learning ground almost in the early days. And then I had the fortune of building a company called Terminus with a couple of co-founders. We got acquired by a PE firm in 2019. And since then, I've obviously essentially nobody can hire me anymore. So I'm unhireable. So as a result of that, I have no choice but to go ahead and do research and be a self-proclaimed go-to-market partners, analyst research. So what we do is research whatever is happening in the go-to-market world. And we have this incredible framework called the go-to-market operating system that we enjoy sharing and learning and using that to teach others. So with that, back to you, Manoj.
Thank you, Sangram. I've seen you, and I've seen you grow. I've seen you bring new concepts to the market, bring new evolution. The flip the funnel was a new thing. That's where the account-based marketing came, and now you're very successfully taking this movement of go-to-market motion out. So kudos to you and your team. To kick things off, what are the most critical elements that guide your go-to-market strategy, right? As our audience adopt this go-to-market, the new motion, what are some of the tips that you will share with them?
Well, the number one thing, it came about more and more recently, Manoj and Janice, and you probably are seeing this in the marketplace. We actually ran a huge survey, hundreds of people from B2B companies across mid-market, enterprise, and SMB. We were very specific. We wanted to see if there are nuances in it. And we asked this very simple question. What is stopping you from hitting your go-to-market goals? Whatever your business goals are, what is stopping you? And we gave them three options. Market conditions, because we always love to blame the market, or we were talking about politics before, blame the elections or whatever, like blame it, easy enough for people. We thought people would choose that. The second one, we said that maybe you're in a competitive marketplace. So maybe there are other companies that are crowding around you. There's pricing wars and all these things are happening right now. Maybe that's what's happening. Or third, we asked them, and we literally put that as a third option because we genuinely felt that it may not be the one that they would select, which is internal go-to-market clarity. And guess what? The third one, about 68% of the people say that's the number one reason stopping them from hitting their go-to-market goals. And I think it speaks to the challenge and this topic itself. Like when we talk about ideal customer profile, everybody thinks, I did that in my kindergarten. I mean, everybody has that vision of like, everybody knows what it is, but nobody really does it, or does it well, or does it often enough. And so I feel like internal go-to-market is your competition. So in short, your competition, I feel like across the board, if you're listening to this and thinking about, is really you, is how you bring your team together, how you align on those goals together. And from there on, everything is possible. But if you don't have go-to-market alignment and clarity around what goals, what bets are, what your North Star is, man, it's really, really hard to pull that together.
Yeah. And one of the key elements, Sangram, of aligning everybody on the goal is to figuring out who is your market, who's your target audience, who's your ICP that you're going after.
Yeah, we hear this all the time where, and I'm sure you have like, you have and this may be something, hopefully this is some of therapy that people go through. I've been in companies before, and I've some of the companies you advise where the salesperson would like, man, I sold something in healthcare. And then all of a sudden the entire organization is building healthcare data sheets, healthcare webinars, healthcare research. And it's like, maybe that's not your target. Nobody goes back and looks at it. And right now, because the numbers are so dire, where people are trying to hit the numbers, any good news is great news for people. So people are just jumping in on it really without taking a step back. And if you take a step back, it's almost like you might feel like, why is this person a naysayer? Why are we not jumping on it? And the reality is we always have to go back to this idea of ICP, and we call it in our own version, total relevant market, TRM. It's not the TAM that's going to tell you, TAM is going to tell you that you can be in a business for a long time, is the TRM, which really focuses on the ICP, that's going to tell you where can you actually thrive. It may be in a specific segment or industry or a persona, all of these factors. But gosh, I see that happen, Manoj and Janice, every day, where people just go, oh, squirrel, and running after it. And then all of a sudden you're like, we just wasted resources. We got new technology, we had team, and there goes your go-to-market clarity and alignment.
Thanks, Sangram. Janice, what do you see? The other side of the pond, mostly.
What I completely agree with that. What I'm seeing is that we are so focused on outside of our organization, what's going on and how we can sell and gain more revenue. We're kind of losing track of why we're here. We're here to serve. We're here to serve a particular customer. And the problem is we don't revisit that nearly often enough. So we decide on what our customer is and we go with it. And then 5 years later, we're still there. Well, buyers and customers are moving so fast. We have got to continue to reassess and readjust consistently, continually, always. We've got to question, is this where we should be? And what I say to my exec team, senior leaders, I often ask them a question, which is, do you know the impact of that particular decision on your most valued customers? And if you can't answer that, if you can't quantify the impact of that decision on the most valued customer, the target market, then you should not be making that decision. And it really does get people to think about what they're doing, why they're doing it, and what the impact is. And so that's a really good question to actually stop and get you to think about where you should be investing your valuable and very limited in 2024 resources. And so, you've got to understand what is your right go-to-market strategy to understand what is and isn't critical. And my starting point, as I've said, is always customers. How customer-centric are you, and how do you evaluate your different segments of customers, and how are you keeping them in the loop and the feedback loop from that? So that's the first thing. Start with your customers, question the impact on your customers. And then it's really looking at how do you weight and evaluate the most critical elements that's going to drive your decision making. And this is your ICP, your VP, value proposition, market segment, customer strategy, and your sales and marketing, customer success alignment. But we always forget about buyer and customer experience. How we are recording, measuring, evaluating that in all of those different elements. How good are we at all of those different, not from our point of view, but from our customer's point of view? So once you've got all of that in place, then you want to think about, okay, well, how does this align with our business strategy, our long-term goals, where we want to be, and how are we operating to make that happen? So looking at our strategic planning, how regularly we're assessing our addressable and target most valued market, the customer feedback, the competitive landscape. So you've got to have different levels, be really clear about where you are in terms of your customers, be really clear about the different elements that you need to question, and be very clear about how that fits in with your overall business strategy. And I've stopped there because I could go on for England.
No, this is very insightful, very insightful. You know, we all kind of established that, you know what, figuring out when you're customers at the center of every decision that you make, right? Keep delighting your customers, keep expanding, retaining your revenue and expanding your revenue, and especially in 2024 when the resources are so scarce. For the new business, defining your ICP and aligning the rest of the organization is important, yet many companies just don't do it, right? So can we here outline what are the risks, what are the consequences of poorly defined audience or poorly defined ICP for the businesses?
Yeah, I mean, I could just give a couple of thoughts on that. I mean, we all know, I mean, it's going to cost more money and you're going to run out of it. If you have the wrong customers in the front end, your CS is going to burn out, and therefore you're going to have the big challenge of churn is killing your business. A lot of companies go out of business where they have great top line growth. But here's a tangible example of that. There were two companies we were advising at one point, and one of them, in a very similar space, by the way, and one of had about 20 million in revenue, and their valuation came out, and both of them were raising money. One was 20 million, one was 10 million. The $20 million business, their valuation came out about $300 million. The $10 million company was almost over $500 million in valuation.
That must be in 2021, right?
Yes, that was in 2021 when we started.
Those valuations are no longer
valid. Yeah, now it's like, you know, if they get 100 million, they'd be ecstatic around that. I remember that conversation with both the CEOs, and the 20 million CEO was pissed. He was like, "Man, we're a $20 million company. We doubled than these competitors out there. How is it that we only have $300 million valuation?" And then the $10 million was happy, and it was great. And what the reality was that the $20 million company did not have the product market fit that we will have from an ICP perspective. So they were creating a lot of customization. They were using a lot of process. They had an incredibly high CS and product debt that they had to overcome. So when the investors were looking at it, they're like, well, you don't have a full-on product market fit. So that's a very tangible millions of dollars of cost that you can see in valuation that can hit. Versus the $10 million company, they had less customers, but they were focused on one CRM, not 10 CRMs. So integrations were with one. So their tech debt and their CS and the pricing, all of that stuff, was way more streamlined. To me, that was the power, ultimate power, because we're all here to create value for our business. And the value is either you get acquired or you're valued or you go public. Therefore, you create value for your customers and shareholders. That is really, really clear example of what a bad ICP would do to your business. It might give you false positives that things are good, but in the end, the valuation and your customer will speak for themselves, and you may not get that valuation.
Yeah, so it's not just at the front end, your win-loss rates that change with the poorly defined ICP. They're not optimal, but downstream impact on CS, account management, renewals, and everything else, and the overall business strategy.
Yeah, that's where most people don't spend like nearly enough time when we are like, and now we are all thinking about net NRR, right? Net revenue retention. And hopefully most people are looking into it. I'm sure, Janice, you're seeing that with your customers, given your focus on customer being the center of it with all of your clients. It's a new phenomenon in terms of how people think about business, but it is ultimately the best practice. If you have great customers, they stay with you longer, your CS debt is lower, your tech debt is lower, you're going to just build a better business. It may not be hundreds of millions of dollars immediately or at the pace that we're all taught that you should grow, but you will be in business, which would say something right now.
Do you know what? I think this is a great example for all organizations, everyone listening, as to where you're going to be, not in 5 years' time, but in 3 years' time. You're going to have less customers. You're going to have less customers, which is brilliant. It's great.
Yeah.
So that means you need to be more focused on your ICP. Where is your sweet spot? And also, if you think of, the 80-20 rule, 20% of your customers giving you 80% of your revenue. Well, think of that 20%. 20% of the 20% is going to be your future customers. So you need to identify now who they are. Who is the niche of the niche that's going to provide the 80% of our revenue going forward? You can see every business should be in a niche business. But the key is to find out, what is that niche? What is that sweet spot? What is that ICP? And how can I refine it even further? And that's where you're going to win. And that's a great example of a company winning because of this.
Yeah. So very, very true. So Janice and Sangram, we talked about poorly defined ICP and impact on the go-to-market teams, right? At the front end, your BDRs, your AEs, right? They're just frustrated because of the win losses, like the ratio there is not optimal. But once you bring customers that are not ICP, everybody else suffers. What about other parts of the organization, right? The product, if they are not clear on who your ICP is, or the business strategy folks, right? Or your acquirer, right? Or you're going public and you're giving that message to the public markets. Let's talk about that a little bit.
Yeah, I mean, Janice, I love to hear your thoughts first.
Well, if we look at market channel, the impact is that you have ineffective channel selection. But not only that, the suboptimal channel optimization, because when you have a channel, you've got to optimize it. So, the ROI of the marketing, the sales effort, we've talked about the amount of waste that's involved. But, just focusing on the channel, you're not able to optimize it. And it's pointless then, absolutely pointless being in the channel if you're not optimizing it. And then in product development, you've got misalignment of products. You may have fantastic features, amazing benefits, just incredible, but it's of no interest to that customer. They don't value it. They're not going to buy it. So it's a real missed opportunity in the potential that you have when you're really close to your customer to innovate and create new opportunities that other competitors do not have because you're so close to your customer. And you're actually developing the right type of products, because these are not only your customers now, but they're going to be your future customers. You're growing with them. So in terms of product development, it should be informing your product development. Your feedback loops have got to be informing your product development. And then overall business strategy, your strategy is going to be misaligned. I mean, that's pretty obvious, but it puts you at a competitive disadvantage. You are now a commodity in your own market. Who wants to be there? Low value, discounting. These are all symptoms. This is reasons why you really don't want to be there. ICP is critical to everything that you do in your business.
Love that. Yeah. Jan, one of the things, Janice and Manoj, I've been seeing is this reversal. This is one of the mega trends that we just put out in our research. One of the mega trend that we're seeing is that there's a reversal of software as a service, which is we are all byproducts of that for the last 20 years, thanks to Salesforce and many of the companies that have actually pioneered that. And we understand the value of recurring business, but we're seeing a reversal on that one, where it's service as a software. That is happening a lot more in the marketplace. What I mean by that is software as a service, where you can actually raise a lot of money, you get a bunch of customers, you kind of figure out along the way, but there's a well where you can take money from to continue to iterate and test out and all that stuff. So you end up spending a lot of money on your go-to-market, your product or whatnot, in the pursuit of figuring it out. but you do that based on the investor's money, and that's why you're in that cycle. Whereas the reversal right now we're seeing, because the investments have dried up in a lot of these companies, founders are starting to recognize that, well, we need to create a service that solves the problem. Janice, to your point, talking to truly, you have to then get out of your comfort zone, really say, hey, customer, how much would you pay if I build this? So you're actually selling a service and then building a product to support that service on the back end. So you reverse that tide. So you ultimately will have product and you'll ultimately have recurring business, but the investment is actually not coming from your customer as opposed to investors. And that is fundamentally changing the COGS, your all the metrics that we know in the marketplace right now. So that has been a really interesting reversal and goes back to the ICP conversation. I don't know if any one of you are seeing some of those elements popping up.
Yeah,
But
your
that's
customers
very
are your investors, aren't they? Your
Yeah.
customers are your investors. Actually, it's probably a better place to be because, you know,
Yes.
like it can be really uncomfortable having investors.
Yeah. Yeah, especially when you there also is the ideal investor profile, right? You as a
Yes.
company, if you're not ready for the Series A or Series B, going to those investors, it's a stretch for both a company as well as for the investors, and there's a misalignment, and that's why you see
Yeah.
so many companies, as soon as they miss their revenue goals or 1 or 2 quarters, the CEO is out and the new CEO is here,
Yeah.
the
Oh my
leaders
gosh.
out and the new revenue leaders here. We are seeing already that in the market. So true. So Janice, you brought up a point that companies evolve, but they don't go back to redefining their ICP, their ideal customer profile, their audience profile. How often should companies look at who their ideal customer is and go through this exercise?
Well, you know, how often are we doing a business plan? You're probably doing it every year. And that's the point when you need to reevaluate everything that's going to feed that business plan. Do you have the right business plan for your customers? What's changing your customers' behavior? I often, with my clients, do a customer journey map because that informs a lot within our business by understanding the behaviors of our customers, the potential of our customers to grow, the kind of trends in the market. It's a really good way of really understanding the directions your customers are going, what they're buying from you, why they're buying from you, what do they think of you, and all the feedback loops. But you know, today, aren't we lucky to be in the world we are now with all of the advanced data analytics that we have at our disposal, machine learning, predictive modeling, analytical intelligence to actually do the work for us. All of that crunching of data and numbers, and we're able just to feed that in and ask ChatGPT or whatever platform you use, you know, to create the ICP for me, to create, you know, out of all of the trends, what does this mean? Help me to, you know, understand what does it mean for me. So we are it's just pure laziness now. If you do not use the tools available to you, and you know, we've got Sales Intel as well that's helping us, making it so easy for us. So if you're not doing it at least on an annual basis, when you're developing a new product, a new iteration, you know, if you're doing these things all the time, it's continuous. But also it brings back to, you know, all of the feedback loops that you should have in your bit. As soon as there's an outlier, that's when you need to delve in deeper and interrogate it even further, and think of all of these outliers as opportunities that you're not maxing out.
This is so true. So true. Very well said. Sangram.
Yeah, well, I've been like thinking, I think the word of the day is laziness. I'm gonna use that again as later on at any given time. It's like it is pure lazy right now for not using the tech, and a lot of tools out there. And you mentioned about Sales Intel, like we did an ROI study with you guys, I know some time back, and gosh, like the interesting thing about it is there are actually more tools available now than ever before. So to your point, Janice, it's a blessing to be in the time that we are in. And if your tools are available, and they're available for a fraction of the cost in many ways. Like I think like in the heydays, like somebody should buy in Sales Intel product kind of sorts for like a lot more, like 10 times more value, because you're able to deliver on the outcome of it. So right now, because the market is in such a stage that you're not getting, the businesses are not closing as fast at a faster rate, or the market is a little bit shaky enough where people are more cautious, I think it's not seeing. So I think that's going to happen. But the other thing, I was thinking about this question as we were talking about this, Manoj, is when we at Inbound, like just last week or week before, we did a whole session called "How do you build your go-to-market on a slide?" And this is one of the questions that came up, and we used the operating system around it. And what was interesting is when here are the 3 times that we see companies doing this more often, just based on our experience. Number one, whenever you launch a new product.
Okay.
So if you have a new product, you have to go through, to Janice, your point of like, well, is this for the right customer? Is the right, all those things, right? A new product. So a lot of times people have versions of new products or new 1.0, 2.0. So every single time when you add something new, you have to at least do a quick check to make sure that we are still after the same persona and the same motion that we're running. Number 2, you're going after a new segment. So all of a sudden, if you decide that I want to go from CRO to CMO, well, you better have messaging, positioning, and all the details around it to make sure it is, because it's a completely different persona. CMOs, are more emotional about all of these things. Like, I've been a marketer, so I know what that looks like. CROs are like, show me the numbers. So it's a different messaging that you have to think about. And the third part, and this is the one that I think most people miss on more than anything, because the first 2 more or less are obvious. The third part is every time you actually have a change a big go-to-market executive change in your organization. So if you go through a process of, and which is what is happening a lot, your CMO, your CRO, your executive team has changed and turnover, you actually need to go through this exercise because they need to be bought into it. Everybody needs to be fully trained up into it. And I think most companies don't do that. They feel like it's a one and done thing, where, to Janice, your point, it's a process. It's a transformational process for your business. So I hope companies at least do for the first 2 times, but the third one, which is not as obvious, but actually has a big impact if you don't do it.
Very well said. I'll add one more. I have many go-to-market leaders come in and say, walk me through the decision tree. Like, should I do ICP? Analysis? Absolutely, you should do it, right? How should I do it? Well, make it data-driven. But if you're a startup, then most of startups start with the founder's gut feel or founder's experience. You say, you know what, I come from this space, I know this space, let's start with that. But then once you start collecting the data, make it data-driven. And then next is, how frequently should I do it? As Jen has mentioned, and you brought up very, very viable pointers at which you make the decision to redo it or at least revisit it. One other element is, it also depends upon your go-to-market motion, right? If you're a PLG, you're going to collect data much faster. So you can afford to do that almost on a quarterly basis. But if you have a sales-led motion and your sales cycle is 3 months, then, even 6 months is too early to Genesis. And then it's like once a year. So that's another element that, play into how often you revisit the go-to-market strategy and then ICP.
Yeah, I love what you just added to that. I think the go-to-market motions are changing so much, like with the inbound and outbound, and if you're doing a PLG, you may launch a same product with a different pricing, and now you're doing it for a new motion, like a PLG versus an enterprise motion. That process needs to be rechecked.
Yeah, cool. This is awesome, guys. I can go for
could I just ask you, Manu, if you were to ask the executives what is the ICP, would many of them know?
I would say no, and then if they do, just like, Sangram, you ask in your go-to-market motion, the go-to-market strategy, who owns it? Like, everybody will have a different answer. Everybody will have a different answer. Well, I really enjoyed it. I hope our audience got value out of it. I can go for, we can all go on for this on this panel for long, but I have a few questions that let's just answer those. First one is, Janice, for you, from Sarah Dietrich. Sarah is asking, Janice, how do you balance all those levels with your strategy? What do you prioritize when you have a few different avenues towards your immediate business goals?
Prioritize your customers. If you, and even answering the second question which you'll ask, if you were to sit down with your most valued customers, and if you're new to business, who's your ideal customer, and you were to take them out to lunch and ask them a few questions, or if they are most valued customers, what's their experience of you? You know, you just subtly throw in some questions there. You're going to get an awful lot of data to help you to understand what your priorities are, where you should be moving. So I would always start with the customer first, and then looking at your operational strategy, and then how that is fulfilling your business goal. But start with your customers first.
Yep.
Interview them. The second question that talks about evaluating the customer experience beyond using customer feedback. Talk to them. Go and talk to your most valued customers. Now, we're not going to have millions of customers. We're not even going to have thousands of customers when we think of our ideal and most valued customers, the ones that are giving us the most business. Why aren't we talking to them enough? And that's exactly what we should be doing. Speak to them. Forget about the survey. Go and speak to them.
Just go talk to them. Yeah.
Yes.
Many times, just pick up the phone, or just go in person. If you can go in person, that's the best, right?
Yeah.
That's the best. You know, like Manoj, you know, like we have done road shows all around, and one of those, that's one of the best things, because we end up meeting our customers at least 4 to 5 times a year in person for hours together, learning together and talking together. Our retention as a result of that has been like crazy, because we're just with them. They're telling us their challenges at lunch or a happy hour, and then we're talking about that, and we're understanding, and we're creating something, we're going back to them. You're absolutely right. I think talking to your customers has to be the biggest driver. The challenge most people have is they just don't know how. They just don't, because we're in such a we want culture of like, well, I want to get on a call with the customer because I want to upsell, I want to cross-sell, I want to figure out what they do so I can build a new feature. Like, it's even that part feels like I want, as opposed to, this might sound crazy, and going back to using some words that will get people thinking about it, is that, what about no agenda? And just get to know what are your biggest go-to-market challenges as a customer. Forget what product you sell, but just ask what will make them thrive in their career, what will make their job easier. And I've always been surprised what I get out of those open-ended conversation, because they always lead to something that you can do about. Yep. But most of us are afraid to have that open-ended conversation. They feel like they need a deck, they need a whole team, and they need everything. You actually just need empathy, which is something that you got to just learn to have it.
Right.
I completely agree there. I mean, how about saying, you know, we want to make sure that we're servicing your needs. Let's just have a chat about this. What more can we do for you? And you know what? You're going to learn as much from them as you're going to give. And also think about, how can I give them something they haven't already got? What kind of value or introduction? You need to make sure that they walk away feeling they got a lot of value out of that time. And they'll often say, this was so great, I got so much out of this. Next time, I'd like you to sit in front of our senior management team and let's have a round table. Yes. Let's book that in next quarter, next year. It can become an annual thing. And all of the insight and knowledge you learn from them, because you're giving a lot of value and ideas and really kind of wanting them to move forward and improve. And of course, you're sitting around the table with them. You now can take a lot of that information, not about the customer, but, you know, around that market trends.
Yeah.
And use that not only for yourself, but with other customers as well. Suddenly you look like a rock star. You've got all of this valuable information. Why wouldn't you be doing that?
So true. So true.
And Manoj, you actually do this probably one of the best. I see you being here, doing these things. You're not just handing over to a whole bunch of people. I see you being on customers. I kudos to you, because I feel like you, as CEO, has to lead from the front. So everybody on the team feels like, you know what, if my CEO can make time to do this, I need to make time to do this, as any other leadership role that you may have. It has to start. We all have to come out of the bunkers and get back to on the field, if you will.
No, thank you. Totally appreciate it. You know, a quick scientific fact somebody shared with me about the effectiveness, you know, on that curve from sending an email, making a phone call, getting on a Zoom video call, right, where the camera's not turned off, and actually going and meeting. And in all these interactions, why in-person meeting is so much more effective than sending an email and everything in between is because the number of bytes that you're transferring, right?
Yeah.
The email is 200 kilobytes, your call is couple hundred megabytes, your video call is couple hundred gigabytes. And when you meet with somebody and shake hands, the number of electrons and neutrons that are the bytes, there's a terabytes of emotional exchanges that are happening, and that's why they're so much more effective. So
I love that. I always thought that was more like, there was another data study around like, dopamine shots. Like, you really feel like you're getting a whole bunch of dopamine shots when you meet somebody in person and have an eye contact and a physical touch over any other thing that you possibly can. So I love that. I wrote that down. That's super good.
Yeah, those are your terabytes of bytes, if you will, transferring in dopamine shots. Well, we have a couple more questions here and 4 minutes left. Let's see if we can take a little bit. Sangram, you want to take the next one? Should ICP be completely based on revenue profitability or capability/capacity to serve any type of customer?
Okay, so I'm and I'll just share a slide. Let me see if I can. Yeah, I'm going to share this one because we did this, and this might probably answers this question more than anything else. We see, and people can take screenshot of it. It's also on GTM Monday research. This is what most companies don't do in their ICP process is the negative ICP. Because you'll only take decisions when you know there is a full-on positive, like, yeah, people are, oh yeah, this would be awesome. But when you realize that if you have a negative ICP, that can actually hurt your business, you lose money, all of a sudden you have attention of everybody. So we just finished one of this work and exercise, and as soon as we put these buckets in front of them to answer that question, this is where you go look at your existing customers and just start writing the names of customers, right? Like +5, what are the name of Galera? Like you just put 3 customers for each one of these buckets. Automatically it becomes 100% clear to you, okay, we need more of these type of customers, not these type of customers. And that level of clarity in it, as opposed to just an overall conversation about ICP, firmographics, and all of it, it's almost intangible for people, right? Is to, okay, well, those are fine. But when I see the name of the company and that can have that much impact, and I know somebody at that company, it changes the conversation. So that's a very easy and effective way to get this this focus right now.
This is great. I know we have a few more questions, but we are almost out of time here. Janice and Sangram, thank you so much for joining this panel. How can our audience get in touch with you? What's the best avenue? LinkedIn, Twitter, email?
Carrier pigeon.
Yeah.
LinkedIn. Janice, don't forget my B, Janice B. Gordon. And, please do say that you heard me here on Sales Intel annual event summit. Yeah, love to hear from the audience.
Yeah, LinkedIn is great. We do write a research, 100,000 plus people read it, called GTM Monday. So if you Google GTM Monday, you will see research, and all the research that we do is free and out there. So hopefully people can sign up.
That is awesome. Well, thank you so much again. And next up, we have community workshops. So if you're interested in marketing or sales or in executive sessions, we have plenty of those community workshops going in parallel. So let's join in one of those. Once again, thanks, Janice and Sangram. Thanks, everybody.
Thank you so much.
Thank you.
Janice, so good to be with you.
Yeah, it's brilliant.